I'm John Kosar, Chief Market Strategist at Asbury Research. Thanks for listening to our latest Following the Money podcast. Today, I'll be talking about what our latest analysis and data-driven models are saying about current financial market conditions. That is, when to be on offense and looking for opportunities, and when to be on defense and protecting your capital. In our previous Following the Money with Asbury Research podcast on June the 4th, we said that our Asbury 6 wealth management model had moved to positive or bullish on May the 18th, and that the benchmark S&P 500 had subsequently just broken out higher above 4,600 from 6 months of sideways investor indecision, clearing the way for a rise to the next key overhead level at 43.25. 43.25 was exceeded last week as the S&P 500 traded to as high as 44.48. However, we are now seeing some early indications that the U.S. market is either at or at least near a tactical top and a potentially nasty corrective decline. Today is Sunday, June 18th, 2023. Happy Father's Day to everyone. Now let's follow the money. First, let's look at the broad market or the S&P 500. The S&P 500 finished last week at 4410, up 111 points or 2.6% for the week after breaking formidable overhead resistance at the 43.25 August 2022 benchmark high on June the 12th. Without any hesitation whatsoever, the 43.25 area now becomes primary tactical underlying support as SPX moves towards the next formidable overhead resistance level at 46.37, which is another 5.2% above the market. Tactically, our Asbury 6 risk management model, which measures the internal strength of the market, shifted to positive on May the 18th, and the S&P 500 has since risen by 6%. The Asbury 6 remains positive heading into next week. As long as this remains the case, we will expect the U.S. stock market to continue moving higher on a near-term basis. However, investors are starting to get too bullish, according to some investor sentiment metrics. This doesn't mean that the market is topping right now, but rather is an early warning to longs to start considering that a top may be coming and starting to think about, strategize about how to protect open trade profits when that happens. Now let's move to sector rotation via our CEF model, which tracks the investor asset flows as they move around the 11 sector spiders, which together represent the S&P 500. This week's top-ranked sectors, according to the CEF model, are technology, consumer discretionary, and industrials. This is where the money is currently going in the sector space, according to our model. Technology has been ranked among the top 3 sectors according to the CEF model for 13 of the past 15 weeks, beginning March the 13th, and has outperformed the S&P by 11.3%. Since then, consumer discretionary has been ranked among the top 3 sectors according to CEF since May the 22nd, and has outperformed the S&P 500 by 5.0% since then. Now let's move to domestic asset allocation via the CARP model. CARP stands for Cross Asset Relative Performance. Thus far this year, the CARP model has favored growth and technology as overweights. Growth has outperformed value by 19.9% since first appearing in our model as an overweight on Jan the 26th, while also outperforming the S&P 500 by 8.8%. Technology, or QQQ in this case, is the ticker we use, has outperformed SPY by 17.3% since first appearing as a buy/overweight signal in the CARP model on January the 20th. Now let's move to global asset allocation via our US versus the world model. Through the end of last week, just Taiwan and Brazil are outperforming the S&P 500 on a tactical and a strategic basis according to our model. Brazil has outperformed the S&P 500 by 5.5% since first appearing as an overweight in our model on May the 12th. So there it is, our latest bi-weekly Following the Money podcast for today. and a short synopsis of what we think is particularly important to pay attention to as we move into the third quarter. More information about Asbury Research, including our data-driven models like the Correction Protection Model, or CPM, and the Asbury 6 for wealth preservation, our CEF model for sector rotation, and our CART model for domestic asset allocation are all available at asburyresearch.com. You can use the contact tab there to request pricing for our premium services. If you'd rather just take advantage of our free stuff for now, you can go to the Asbury Research YouTube channel and subscribe for more access to additional audio and video presentations like this one. Finally, the legal stuff. This podcast is provided for information purposes only and is not intended to be a solicitation to buy or sell securities. The performance indicated from backtesting or historical track record may not be typical of future performance. No inferences may be made and no guarantees of profitability are being stated by Asbury Research LLC. The risk of loss in trading financial assets can be substantial. Therefore, you should carefully consider whether such trading is suitable for you in light of your financial condition.